On the call this morning, S&P futures are up nearly 1%, following European markets higher, which are rebounding off of 2-year lows. Reports that General Gaddafi's regime is on the verge of crumbling as Libyan rebels storm Tripoli are boosting stocks and pushing Brent crude lower, down 3% on the news. And gold hits another record high, approaching $1,900 an ounce. Can gold hit $2,000 an ounce this week? I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Rudd, the Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you a morning call. Lots of things happening today, Scott. Let's start with the futures. They look to be opening higher. Do you think that we've seen the lows of the year, and how would you be measuring this kind of bounce that we're seeing today?
I think any responsible technician can't say they've seen the lows. We've seen an elevated VIX. We've seen the VIX over 40. We've seen some extreme moves in a lot of the leading stocks, but I see technical damage everywhere. All I see right now is a trading lower pivot to trade against. If you wanted to do a tier 1 approach for a macro investment, I think it's okay if you have a long-term thesis, especially if you sold correctly. But by no means can you confidently say go all in here because the lows of the year are in.
And I have to say, on the two fundamental points that I've been looking at, of course, gold almost hits $1,900 an ounce. That can't bode well for the stock market. Not only that, we have Goldman Sachs coming out today and downgrading U.S. growth to 1%, the last investment bank to do so. So even when we see these rallies, I have to wonder how much fundamentals will just really pull it down at some point.
Well, that's what's going on everywhere. Okay, growth is slowing here. Growth is slowing around the world. You're getting austerity measures implemented to even put growth even on a slower basis. So we have to really watch these levels closely. So if you look right here at the chart, let me show you just the Dow Jones, because a lot of individual investors like to see it. I have to show you this head and shoulders formation again, because this was the clues that we were going to go lower. This was that bearish pattern that if you saw it and you actively manage your account, you could have sold a lot of your stock around 12,000. Okay, we hit as low as 10,006. It's 1,400 points of savings. So, like you said, if you want to potentially try down here around 10.8, because you just saved yourself 1,200 points, it's an area to put some money to work. But if this area doesn't hold, you need to go to your weekly chart. And on the weekly chart, if we see a break here, if they don't like what comes out of Jackson Hole, you can easily see 10,000 to 9,600 before you better even think about putting some more money to work. This was your rollover here on the weekly, your move lower, and right now we need more time to figure out if this area holds, or do we go back down to here, in early fall.
And what if we go the opposite direction? What if we do see a continued rally over the next couple of days? What are those key resistance areas that you're watching? Because interestingly enough, I was reading a note from Mark Arbiter, who's the chief technical strategist at S&P, was forecasting that 1054 level a few months ago that we were talking about, is now expecting a decent sized rally, perhaps to the 1236 level or the 1268 level. Yeesh.
Well, I guess it keeps changing, and that's why the thesis that I'm writing about this morning is Plan A, Plan B, and Plan C. Plan A, if we do hold this lower level and we start to see some of the leading stocks strengthen and we start to break above that lower pivot, we can get back and test resistance. Plan B is if we go through that 1101 and we break and the S&P just start falling hard and leading stocks don't go lower and they trigger the stops and come back above and gives you that reversal. Or Plan C, we get below that 1101, we close below it, and then we see that lower level. So I'm going to have Plan A, B, and C, and I'm going to wait for the market to confirm it, but I need to know which one to go to when it actually happens and it's in the process.
Well, let's talk about